Hello traders, Gary Wagner here about 12:45 in Honolulu, 6:45 in New York. It is Monday, October 28th, 2019, and this is the daily report for gold and silver. This report is coming to you a little bit later than usual in that I just arrived back from Southeast Asia and the lecture and conference I participated in last week about 3 hours ago. And also let you know that although there was very little action last week, I was following the market, and we did do the one show when we had that false breakout on Friday. That being said, interesting action today as we go into Fed week with gold futures closing down significantly, currently trading at $1494.50. We'll talk about that in detail when we look at our price board and charts. As you can see from the price board on the lower right-hand side of the screen, currently we have gold at $1494.30, which is about 50 cents below what we considered the fixed closing price in New York. Of course, it is open in Australia. However, on a technical basis, a couple of things seem really clear, and they are what we need to focus on over this next week with the upcoming FOMC meeting. We clearly had a false breakout on Friday. We can see that from the single-day candlestick in which it opened right at this resistance line, which is simply created by looking at a series of lower highs and then closed approximately at the same price, but once again within this compression triangle. Today's trading activity is interesting because it opened just above that resistance line, but quickly and sharply traded lower, settling down about $10 on the day. But what is noteworthy is where it ended up closing as well as the low, which is occurring very, very close to the 0.23% retracement at $1493.80. with the market now at $94.30. So we're virtually at that spot. Now, on a technical basis, I still believe that we could see this market experience a bullish breakout. However, what we do want to be aware of is this new level of support, which is now below 1,500, because if we get a major break below that, the next real level comes in at about 1450. That level is pretty significant because what we see at this level is a series of tops that come in. And then if you look at the breakout when the market pricing moved above it, we had a series of large green candles, and that indicates a release of energy. So to me, this is a key level. What we want to look at is whether or not the Federal Reserve cuts rates, which is widely anticipated and I believe factored into current pricing of both gold as well as equities. The second thing that is noteworthy, and it necessitates us focusing upon this, is that gold and equities tend to run opposite of each other. We say an inverse correlation. That means that financial traders, analysts, hedge funds tend to move money from risk-on stocks into gold when there's weakness in the stock market. So you see that inverse relationship, with one major exception: when we have monetary stimulus, lowering of interest rates, and the Fed or central banks building their assets, in other words, making money easier to obtain, because that tends to have a bullish effect both on stocks and gold. And so it's kind of an exception to that rule. That being said, as we spoke about in our letter, there's some things we really want to watch that are going to be coming up at the end of this month and, of course, next month, specifically the trade war and whether or not there's some sort of signature in November when the two heads of China and the United States meet. Also, recently, as this week, we had some more sanctions placed on Iran, which has the possibility to really heat up, and if so, be much more bullish for gold and actually could be very bearish for U.S. equity. So we'll have to see how those things play out. But all things being equal, the last couple of days, meaning Friday's trading activity and today's, indicates that even though a Fed cut in interest rates has an effect that is bullish on stocks and gold, it seems to, at least for the last couple of days, been favoring stocks. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.